All right, good morning, you guys. It's currently Wednesday, May 7th. All right, cool. I love doing these, really do. The only reason why I do these now is because I've been trading pre-market, so I get my trade out of the way, and then I can focus and, attend to you guys and teach you guys what's going on. So I don't know if you guys noticed yesterday during pre-market, we shot up like crazy. I'm not pre-market, during Asia, we right at market open, we just pushed up like 1,000 ticks, like 1,200 ticks, something crazy like that. Yeah, we'll measure it out right here. Yeah, we pushed up crazy, like 322 points. So, okay, so yesterday, what I told you guys I wanted to see was I wanted to see lower prices into this 4-hour order block, sweep this low, and then immediately reverse, which is exactly what we got. We had a fantastic day yesterday. However, okay, I wasn't too certain on whether we were going to continue up higher for the week or we were going to continue down lower. But what confirmed us to continue down lower for today, at least, is that we respected this 1 hour fair value gap and then also the order block represented by these 3 up close candles right here. So we nicely rejected off of it during Asia and then we started breaking down lower. Okay, so for now, the target for the day right now is 1,800 opening price. Or Asia low. That's where I want to see price go down to. If we go to London, because Asia had such a large range, it was expected that London would consolidate. Okay, then we had early New York. We swept this high right here, and then we started to break down lower. Now, let's just say you were trading during this time. How would you have known that price was going to break down lower? Right as price swept this high, and this is my favorite entry model. Although it doesn't look too clean here, it's still, you have to follow along with the narrative. Price swept this right here, and then we displaced, having a change in the state of delivery. This candle immediately pumps up, rebalances this previous candle's range, as well as tapping into this order block. I could literally enter a trade at the open of this candle with my stop loss above here, not expecting price to come up above here. And then I would just target, wherever. But that could have been a fantastic trade right there. If you wanted to be safe, you could have targeted right here. But typically, whenever price will leave an external range low or a high, I want to see price at least go another 30 points beyond it, which is exactly what it does here. Let me go ahead and break down the trade that I took real quick, and then we'll kind of get into it. So originally, I was a bit impatient, so I did take a loss. I tried entering right off of, if I cut all this price action, right here, okay, I saw how we had displaced, and right at the formation of the new 15-minute candle, I entered with my stop loss above here, the 5-minute candle right here. However, one thing that we didn't do was close beneath this low, which was my fault for not paying attention. Because we didn't close beneath this low, this high needed to get taken. I didn't pay attention. I got stopped out, which is totally fine. Right as price pushed up into here, and we failed to hit into this 1-minute fair value gap right there. I wanted to see price tap up into there. It didn't. It failed, which was honestly good. I saw that we started breaking down. I missed my entry. I would have taken the entry right as we broke through this low right here, but I didn't take it. I entered right there as we were rebalancing this candle. My original stop loss was right here, but then I realized I don't want to see it break through the breaker, and I don't even want it to come up to the top of this gap anyways. So that's where I entered, and I just held it for 162 ticks. I'm done for the day. I'm good, and I don't need to trade anymore. So that's pretty much my trade. Right now, market is about to open in about 5 minutes. We do have FOMC today, so I'm not really expecting much out of New York, especially because or AM session, just because we've already moved quite aggressively. If I go ahead and refresh these pages, you'll see that we do have FOMC, and today is FOMC with the press conference. So if you guys do decide to trade the actual news release, I would recommend that you wait up until 3 o'clock. That's where the high probability setups are going to occur, because we do have a 2 o'clock news release and a 2:30 news release. So wait until 3 o'clock. That's going to ensure that you have the highest probability conditions so that you can trade. Does anybody have any questions so far?
FMLC, what is that?
FOMC is where they release the numbers for the interest rates. So it happens every single month. Oh, sorry, not every single month. I believe it is every single month. But we have the press conference one doesn't happen every single month. It happens every quarter, I believe, if I'm not mistaken. I'd have to go back and double check. But yeah, so they release the interest rates. If you guys go here and you guys look at the 10-year note, I don't remember the symbol for it. 10-year note. Oh yeah, right here. This right here is the measure of our interest rate in the United States. So if we actually split the screen right here, I'll show you guys. I'm about to give you guys like a little lesson. Let's go in the daily chart. Hold up. Give me 1 second. Let me make sure I have the right chart. Okay, yeah, I have the right chart. Okay, so yes, it's called the U.S. 10-year note. So it's the measure of the interest rates in the United States, as they are both positively correlated. So if you were to take a look at the U.S. dollar index, which is a representation of the U.S. dollar, the U.S. economy, they are positively correlated. So, meaning if the 10-year note goes up, then so will the dollar in theory. Okay. The higher the interest rates are, the more likely people are to invest into the US dollar, increasing the price of, or the value of the US dollar. So that's typically what we will see. Now, when it comes to the stock market, so S&P 500, so ES or NQ, I wouldn't say it's 100% correlated in terms of like right on the dot exact prices, but it's pretty correlated. So if the US dollar is going down, then you'll also see that the stock market or the ES or NQ are also going to be going down. But this is all on a macroeconomic level. It's not, based off of a 1-minute candle basis. So this is just the overall health of these markets. And it's important to understand these things just so that whenever you're going into looking for your overall weekly bias, your monthly bias, maybe even your quarterly or your yearly bias, maybe if you're doing long-term holds or you're trying to predict, where price is going for the near future, it's important to understand these things. So little quick economic lesson. But that's kind of what FOMC. So you'll see that this chart right here is directly affected by FOMC. So in all honesty, if you don't really care about any of this economic stuff, you really don't have to care too much. All you need to know is that there's a red folder at 2:00 p.m. Don't trade till 3. That's it, if in layman's terms. So if you want to keep it simple, keep it simple. Okay, I'm going to go ahead and switch my chart back to NQ, and then we're going to go back and look here. So actually, if you go to the daily chart real quick, notice how we already swept the previous day's high, and then now we're making our way down lower. So I definitely want to see this red line tapped at 749.50, 19,749.50. That's where we were expecting price to go to yesterday, and it's definitely going to tap it right now. There was actually an entry that just kind of formed on the 5-minute that would have been quite clean right here off of this. Okay, so although this isn't a typical fair value gap, this is actually, never mind, there is one right here. I didn't notice it. Yeah, there's a fair value gap right here. You could have taken that trade. If anything, I would have entered right there upon the formation of this candle, just because we had closed here, confirming that we're actually respecting that fair value gap. My stop loss would either have been here or would have been right here. And boom, you would have already capitalized off of 126 ticks. So that would have been amazing. Right there, smooth, clean, straight to your profit. And remember what we said? Oh, it's already market open. I didn't even notice. Okay, yeah, that would have been the trade I would have taken right there. And I would probably honestly be out of it. There's no need to hold it any longer. And then I would just wait for something else to form right there. So right now, this is the target for the day. 749.50. That's where I want to see price gravitate towards. We also have this 4-hour order block that we had broke through previously, and we came back down. We've already broken through it. We came back down and retested it, but now I want us to push back straight through it. So we're going to have that outlined right here. Right now, I just want to wait. I'm going to split my screen so you guys can see both the 5-minute and the 1-minute. See, that's good. You have to take your profits, especially after a large run like that right at open. It's important to take your profits because it immediately reversed right there. So right now, what we could be doing is pushing back up into the 15-minute fair value gap before pushing back down lower. So
yeah, I got it hitting the price of origin, kind of like similar to yesterday.
Yeah.
Before making like a push down. But if we completely violate that, we're gonna go for like the highs because you have a lot of equal highs and equal lows of that consolidation.
Correct.
Maybe price wants to take out liquidity, but we'll see what happens.
Yeah, I don't want to see this candle's high violet. Excuse me. I don't want to see this candle's high violated, so I don't want price to go up above 19,961 if we're actually going to be continuing lower. This order block should hold. This order block needs to hold if we're actually going to continue lower. So yeah, we need to pay attention to that. Just be extremely careful, and you'll be good to go. Ideally, I'd like to see us react off of here. I want to see this candle, this current 15-minute candle. I want to see it close beneath the fair value gap that we're just now reacting off of on the 15 minutes. So I want to see it respect this fair value gap. If we do end up closing inside of it, that's fine. As long as the body is respecting the fair value gap, we'll be good to go. So this 15-minute fair value gap, it needs to hold if we're going to continue down lower. Whenever you're trading, you need to have specific areas in which you're expecting price to respect with the bodies too. Okay. If the body happens to close all the way up above here, that's going to be a little bit of hesitation. But we'll see. We just swept internal range on the 1 minute. If I go right here, you'll see we didn't sweep it. Okay. I thought we did. I thought we were going to sweep this right here. Okay. We're respecting this high right here on the 1 minute. Let's wait and see what happens here. It's a waiting game like yesterday. Ideally, I want to wait for this 15-minute candle close. Okay, I like what just happened there. Perfect. Notice how this candle, this bullish candle, closed beneath here after sweeping. That would have been a great entry right there. Right as price is breaking through here, your stop loss could have been right at that high. And then I would be targeting anywhere down low. But ideally though, I'd like to wait for this 15-minute candle to close. That's why I didn't say anything earlier. But that could have been a potential entry right there. But I want to wait until that 15-minute candle closes. I like the way that the 5-minute is forming. Right here. Cool. That's great. I don't want to see this high violated now. I want to see this high stay intact. Price should continue down lower from here. But like I said, I don't want to, because this already swept the previous 2 5-minute candles, I want to see it continue lower. Remember that trade that I outlined earlier? It still would have never been stopped out. Even if I entered right here, it would have never been stopped out. That's where my stop loss was right here. It'd still be going. Even though we kind of went all the way up and almost hit the stop loss, it never got stopped out. I want to see price continue down to 1800. Did anybody get in on this?
I got in, but I took my profits.
Okay, good job.
But shorts still look valid though.
It does look valid, but there's no entry right now. The entry that I outlined earlier, just like a couple of minutes ago, was the only entry that I saw.
Yeah, that was a good entry.
Again, I'm not here to give you guys signals. I'm here to show you guys how to understand and why price is doing certain things. You have to be able to read and adapt. Watch the candle formations, watch the candle closures, watch everything that's going on the charts so that you can, be able to make quick decisions. We're trading off the 1 minute time frame, so you have to be quick. But understanding the higher time frame narrative is what's going to allow you to get in on these large range moves. Okay, we said that we didn't want this violated. We tapped into this 15-minute fair value gap. We still have this breakaway gap right here on the 5, so everything is still playing out. You could have taken another entry right here as we were rebalancing here with your stop loss above here. I don't want to see the high of this 5-minute candle violated at all. If it gets violated, then that's going to be a problem for shorts. We could sweep the previous 1-minute candle low and then aggressively displace. Right here, this high right here, we could sweep this high. Oh, we just swept it right there. Now I want to see price displaced lower. I don't want to see it push up any higher from here. Yep, perfect. That's exactly what I wanted to see. That right there would have been an entry for me at the sweep of that high.
Yeah, I got in that. I got in 93. I'm in 3 micros right now. I'm targeting 19,800.
This was a gap right here. It's not a typical fair value gap. We can get into depth on it later, but this would have been a gap right here. That's why I said I don't want to see it. Okay, cool. My stop loss would now be trailed right here. If I took this trade, my stop loss would literally be at break even right now. And then I'd be holding this trade all the way down.
Yeah, stop loss would be above that 5-minute candle wick.
Yeah, right there. And then even if you entered right there, you can even put it at break even now. Because once this candle closes, my stop loss would go right at that candle's high. But it depends if we close beneath this low. So if this candle right here, bodies close beneath these lows right here, then I would trail to that candle's high. I don't like how we failed to take out this low. That's not good. That's not what I wanted to see. I wanted to see the price push down and take out that low. But we still could go down, which I think we will. Either way, your stop loss would be good. It would be above this candle's high, which we don't want to see violated, so we're good. But right now it looks decent. We're about to have a change in the state of delivery right as we close through these up close candles right here. So these 2 consecutive candles will become an order block once price closes through it. So I want to see price push through it and close beneath for it to become an order block. I really don't like what's going on right now. It's very wicky, back and forth. Yeah. It's probably going to get stopped out. Yeah, you're going to get stopped out at break even if you're in this trade.
Yeah, I got out as soon as those things. I took like $60 loss, but that's how I did it.
No, that's nothing. Oh, boom. Would have been stopped out. See, that's not... What did I say? Right as... Okay, these are the signs you have to pay attention for. We should have already came down and taken out this low. Okay, that's not a good sign that we rejected off of this low. It's not telling me that we're going to continue down lower on this specific run. It doesn't mean that we're not going to continue down at all. It just means that on this run right here, where we entered off of this specific candle, we're not going to push down lower. So that was invalidated. This trade idea was invalidated, which is totally fine. Okay, this is what it's you have to do. You have to be able to analyze what's going on in the market, see if you're wrong or you're right, and then move on. So right now, there's nothing telling me that we're going to, there's nothing here telling me to enter in any direction. So right now, we're just going to sit on our hands. I still want to wait for this 15-minute closure. Notice how we came down, we swept the previous 15-minute candle lows, but we're still respecting that 15-minute fair value gap. So there's 4 minutes left remaining in this 15-minute fair value gap, and I still want to see it respected. We'll see. Maybe we might come up and sweep the liquidity resting above here, which is fine, which will kind of give us that push that we want all the way down lower, because origin of price is in this swing right here. Okay, so if we were to take a fib from this high down to this low, okay, we take a fib from this high down to this low, origin of price is here. This is a premium. Anything above this 50% is going to be a premium. So right now we did just sweep this liquidity. Ideally, what I want to see is for price to close beneath that red line. That's what I would prefer to see. There's about 12 seconds remaining. Go ahead. What'd you say?
No, I was saying, depends on how this reacts. We might be looking long.
I wouldn't really go to the stretch of going long just because the narrative is lower prices, so I don't want to enter into any longs because they're not high probability. So you want to wait for the high probability conditions. Notice how I said I wanted to see us close beneath that red line? That's in fact what we did, because the narrative is lower prices. If we're actually right on lower prices, we're not going to close above that because that's just a liquidity sweep. Okay, so we have this next 1 minute candle right here. We still have 2 minutes and 30 seconds in this 15-minute candle, so we'll see how we react right here. But ideally, I do want us to respect that red line. We just tapped into this gap right here. An entry you could have taken right here would have been right at the sweep of this high. Stop loss could have been right here. Okay, that would have been a trade that I would have taken. And then I would be targeting these external range lows right here. And the reasoning behind this is because we're still in that 15-minute fair value gap. Now, I do prefer to wait for this 15-minute gap to get closed. But if you were to take this trade, this is what I would be doing. But you have to acknowledge the risk that the 15-minute candle still hasn't closed yet. And you do have the possibility of getting stopped out. But I'm pretty confident in this just because we are closing beneath this red line. So that would be a valid trade that you could take. Especially if we close with this bearish candle here on the 1 minute, on this current 1 minute candle, then that would even give me more confidence that we're going to continue down lower. But we've already had 3 candles close beneath that red line, so it wouldn't really, it would be nice for this next one to close down beneath as well. And your stop loss has enough breathing room. It's right above that fair value gap right there, which I wouldn't want to see violated on the 1 minute. So I wouldn't want to see this 1 minute fair value gap right here violated at all. I want to see price come all the way down into here. We have sell side resting right here. There's 50 seconds remaining in this candle.
Yeah, I think we're gonna tap into the price of origin.
Yeah, we see. I don't want it to come back up to where right above here. Yep, that's perfect. I don't want to see price come to this red line right here.
Because if you look at the 1 hour, all it is just one big wick.
Yep. But if we're going to continue lower, I don't want to see price come up to that red line. Which it doesn't, it almost came up to it, but we didn't tap it. Did we tap it? I can't even tell. It looks like we barely tapped it. We should start to drop from here, but we'll see. Let me go back to the 15-minute. Yeah, I actually don't like the way that we closed right there at all. Notice how we closed way beyond the 50% of this fair value gap. So right here, I wanted to see price respect the 50% of this range. Now we did come up into the order block, so we are trading within the order block, so we could still come back down lower, and the body still did respect the top of it. So this is still a valid position. However, I'm not too convinced. I mean, your stop loss would only have been 50 ticks, so that's not much risk. If you're trading with one contract, that's $250. If you're trading with 5 micros, that's $125. If you're trading with 3 micros, and that's going to be like $90 to $100. So the risk isn't too much on this trade, which is good.
Ooh, short might be good right here. I like the way we're reacting. Yeah.
Yep. That's ideally what I wanted to see. I wanted us to not go above this red line, which is exactly what we did, and we're now going to push down lower. So I do want to see price come all the way back down to sell side. That's where I want. I don't want to see price come anywhere back up, you know, past the 50% of these wicks. I want to see them hold. Okay, yeah, I don't want to see price go any higher than where it's at right now. So if we break this high right here, this trade is, for me, it's invalid. I don't want to see that. There's a reason why I said to wait for the 15-minute close. The reasoning behind it is because there was a strong feeling I had in my head that we were going to wick all the way up. So it's whenever price is trading into a PD array, especially on the 15-minute or even the 5-minute, wait for that candle that's trading into that array to close first before taking in any entry, because you're going to get the best entry if you just wait for it to close. Also, it's going to confirm whether or not that PD array is going to be respected, because a lot of times we might push up. And then we push through that array rather than closing and respecting it. So that's another thing to be aware of. If you still haven't taken any shorts yet, I would say wait until this 5-minute candle closes. I really don't like the way that we're reacting off of this. We should have already displaced lower, which we did displace lower, but notice what we did. Okay, I'm about to explain something, because we might not be even going down anymore, which I don't think we are, just based off of what I see here. Okay, price came down, we swept here, failing to close beneath this low. Then we aggressively pushed up, disrespecting the 50% of this fair value gap. Then, as we reacted, which, okay, cool, we disrespected the 50% of the fair value gap with the body, we still didn't disrespect the premium high of it, okay? But what did we do? We reacted aggressively lower, but we didn't push down. We rebalanced this previous 5-minute candle's range, and then we reacted off of this order block right here. So for me, I no longer want, literally right as I said that.
What the fuck?
Literally right as I said that. Like, I was just explaining why it wasn't working out.
I was just in a trade and I got stopped.
Mr. Bias, we're dumping.
Damn. That came out of nowhere.
That shit was crazy. Dude, I 100% agree with you. Like, I didn't even want to see. I didn't like the way we were reacting. I like how we went to the 50% of that fucking fair value gap. We just shit the bed. Fuck.
I mean, our trade played out, but we got top ticked right there.
Yeah.
I got stopped by 4 ticks.
That sucks.
Hey, that's trading.
That's a punch a hole
That's
through my
trading.
finger.
Damn. That shit was funny. That's just the same shit that happened yesterday.
Damn, bro. Okay, so obviously in hindsight, it might have been smarter to put the stop loss above the inversion fair value gap right here, but, or not, it's not inversion, it's just a regular fair value gap right here.
I mean, I'd say shorts still look good. It's just the spread would be too much.
I wouldn't enter anything right now. This is what I would have, yeah. That would have been a better stop loss right here rather than this one, but.
If we get a retracement,
it is what it is.
And you can still look for shorts. If not, we're just gonna dump.
Based off the 5-minute right now, we're probably going to dump lower, but.
Yeah, I'm looking at the 1 minute right now.
I don't like when price is like very double-sided like this. We haven't even pushed into any direction really. Like we've been just taking out highs and lows.
Could that be because it's high impact news today?
That's exactly what it is. It's always like this on FOMC day. It's always shit price during New York or AM session, which is why I prefer to not trade. That's why I traded pre-market today. It's not going to trend clean in one direction. It's going to chop like this. Every FOMC day, I remember every FOMC day are the days where I lose the most amount of money. Every year, like the fact that I told myself today I'm done and walking away, I'm very proud of myself because I always end up screwing my accounts. I like how it's reacting right here. I would like it to close beneath this low right here. I want to see price close beneath this red line.
We could just consolidate like the whole day.
That could also be the case. We could just not take it out and then consolidate, which would suck. But that's kind of what's gonna looks like what's gonna happen here. Or what might happen is that we might consolidate all the way up until 11 o'clock, 12 o'clock, and then right at around 1 we'll start trending, and then it'll make the move right at 2. So that's I think that's what's gonna happen. But right now we just want to wait. Yeah, this is unfavorable. Has anybody taken losses today, other than Reek?
I took a little bit.
How much did you lose? Reek, how much did you lose?
Let me check. I was already on drawdown on my 50K eval though, so I mean, it is what it is. I took 2 trains, I'm down like 5.
Okay, walk away. How much? What's the account balance
I'm
at?
watching price right now. I ain't really.
Nah,
Shit.
what's the account balance at right now?
The 50K, fuck, bro. The 100K, I'm still good.
Okay, I would say, okay, one thing that I realized is if you're completely new to trading or maybe you haven't gotten a payout yet, stay away from the 50Ks. Yes, they're the easiest to pass, but they're also the easiest to maintain. Get 100K, get 150K. It gives you more room for drawdown, and then it gives you less of a need to want to rush, because whenever you get a payout, whenever you get to the funded stage, you have so much working room. You can literally continue to trade 5 micros, make $500 a day, and you're like almost not gonna blow it. I don't think I've ever blown an account, a 150K account, trading 5 micros. I always blow it because I'm trading 3 to 4 or 5 cons, being a retard. So
Facts.
just
Yeah, I'm still a little bit above break even on my 100K.
okay, yeah, stick to the 100K, 100, 150K. If you want to go with alpha futures, you guys can do that. Or Top Step is really good. I'm using right now. I have
I'm alpha right now.
Yeah, I got my payout from Alpha, and I closed my accounts because you can withdraw everything. They tell you not to do that, but I did it anyways. So I'm just gonna stay away from Alpha for now. But I'm trading with Top Step and then Apex as well. So that's kind of where I'm at right now. I'm not really trading on my live accounts after February and March. Kind of got wrecked. So March and April.
Is it around the same price point? Was it 150 for Alpha as well?
Alpha's a bit cheaper if you use my code Riyadh. I like Alpha a lot. The rules are really good. They don't have a payout cap, so you can literally withdraw as much as you'd like from your account, which is really good. Get the 100K account. It's going to cost you like $120, and then the activation's $150. So it's very similar to Top Step. The drawdown, though, which is really good. It's a really good drawdown. On the 100K, it's $4,000 drawdown and $6,000 profit target. And you get a 2K daily loss limit, which honestly saves you. So it's really good. So I think you guys you can get up to 3 accounts with them. We can actually go and review it right now. Honestly, you guys should just walk away from the chart. So I think we're done trading for the day. I really don't like what's going on in price. We're just not respecting anything. We're going to consolidate the rest of the day. So there's no point. Also, their payouts, you get your payouts immediately. I got my payout within an hour. So right now, it's showing $159. If you use my code, you get 10% off. For now, there's no sale going on. But get the standard account, get the Tradeovate account.
yeah, I mean, it's honestly really good. The same rule applies for the eval. You can only make 50%. So if you're going to try to pass it in one day, which I don't recommend, or 2 days, I don't really recommend that you do that because you're likely going to blow the account. But you have a profit target of 6,000. It's 3,000 maximum profit in a day on the evaluation. Also, the evaluation doesn't have a daily loss limit, but the actual funded account does. So you have a $2,000 daily loss limit on the 100K account. I haven't tried the 150K accounts. If you want to take the time to pass it, that's beautiful. $6,000 drawdown. If you have 3 accounts, that's like you're trading an $18,000 live account because it doesn't trail. It trails EOD. So, you know, it's honestly pretty good. If you want to take your time and pass that, you can really get paid a lot of money out of these accounts. Like there was this one guy in the Discord, I think he got paid like 100K in their Discord in a month. So it's definitely doable if you take your time with it. And it's only, it'll cost you probably like $210 with my code.
You do 1,000 a day. Take what, about a week and a half?
Yeah, you could do 700 to 1,000 a day. Honestly, if you're on the 100K, I would not trade more than 15 micros. So I would either trade 1 mini or 15 micros. If I was on the 100K, that's what I was doing. I wouldn't really go anything over that. That keeps your risk in check. You're still able to make a decent amount of money without having to over leverage or do anything crazy. So that's what I would recommend in terms of your risk on that. And you'll pass it in a week. You shouldn't be rushed to pass an evaluation. Treat it like the funded account. You know, a lot of us try to pass it too quickly, and then that's where you end up blowing all of your money. So right now, I really don't like anything that price is doing. We're just kind of consolidating within the range from this high down to this low. We've already swept here. We're respecting up here. We could continue lower, but honestly, I have no interest to take any of this. That's why I didn't even trade. It's just not favorable price. I don't like when we're stuck within a range like this, just going back and forth with no clear intention of going into a specific direction. So I would say if you guys are, you know, you've taken a loss, maybe you haven't taken a trade, that's fine. Just walk away and then come back tomorrow. We'll review tomorrow. Let's see what we have tomorrow. Yeah, tomorrow we have 8:30 a.m. news release. So that means that pre-market should be pretty clean. So I'd say just wait until tomorrow, secure some money, like save your capital, preserve your capital. You don't have to trade every single day. So yeah, you should be good to go. Does anybody have any questions for me today?
No questions, my brother.
I mean, today wasn't that clean, but you know, it's good to understand these different conditions and when to step away, when to not trade. Okay, I think that's gonna be it. Do you have any questions, anybody?
No.
Okay,
How many micros would you recommend trading on a 50K account?
3 to 5 maximum.
All right.
On a 50K account, 3 to 5 micros maximum. If you're on a 150K account, you can trade up to 2 minis, I'd say. So 20 micros. I wouldn't go over 2 minis, but that's a stretch. I would say go 15 to 20 micros. On a 100K account, anywhere from 7 to 15 is valid. But it just depends on your stop losses as well. If you have really big stop losses, reduce your risk. If you have tight ones like myself, then you can increase it slightly. But yeah.
Yeah, because I got this 50K account yesterday, and well, I just traded right now, and I'm up like $28. So
Okay, yeah, I would say just walk away right now. Don't touch anything. The market conditions aren't the most favorable, so just wait until tomorrow. Like that, we could continue lower, but like for me, it's just like, for example, right here. Okay, if I go to the 15-minute right now, we've already closed. Like, yes, we might continue lower from here. That's fine. But the body of the candle violated 50% of that order block. And then on top of that, we closed way beyond the fair value gap. Like, for me, that's not something that I want to be a part of. I don't like that. So I'm just not going to trade. I'm just going to wait and preserve my capital and then wait until tomorrow. I've already made some money today earlier, pre-market, and I'm good to go. Pre-market for me sometimes is honestly the better conditions to trade, just because it moves a bit slower and it's just like straight clean runs. It doesn't chop up like here. So, but yeah, I want you guys enjoy the rest of your day. Please, please, please don't trade anymore. I urge you guys to just walk away. That's what I recommend you do, and we'll we'll see each other tomorrow in class. If I do another stream tomorrow, then we'll do one. If not, then we'll see. I'll just decide tomorrow morning. But
Yo, Andrew.
yeah.
Yo, what time usually you be entering on pre-market though? Like right before 8:30 opening price?
Okay, so it depends. So if I like today, I would have loved to be up earlier. Like today was the day where I didn't wake up early because I slept at like 2. So or like I slept at like 1. So I really woke up kind of late. But today would have been a day where I would have preferred to enter. Like look right here. If I was on my charts at 7:30 like I normally am, I would have caught this run right here. So honestly, if you're gonna trade pre-market, you should probably be on your charts around 7 to 7:30 to start looking for setups. If there's no news on the day that you're trading pre-market, then you can typically expect to find a move around 7:30. If there is news, then the news will kind of be that catalyst, so it might chop up ahead of the news. So I wouldn't really trade until like 8 o'clock, 8:30, if you're gonna trade pre-market. And typically, if you're gonna hold the trade, you'll usually be out of it by like 8:15. 9:15 or like 9 o'clock, 8:45-ish, if you're taking the trade. Typically, the trades don't really take too long. So like this trade right here that I took was like right at 8:55. I was out of it in a couple minutes, straight to my TP. I don't really like to hold my trade all the way through. I'll usually exit at the first area of liquidity just to secure my profits, because I know that we're likely going to chop going into market open before that like look at this. Like imagine I tried holding this tried holding all the way through all this nonsense and then been stopped out at break even or even taken a loss. So that would have kind of bothered me a bit, and I wouldn't have liked that. So take your profits, secure. Like there's a lot of times where I'll enter in a little bit heavier during pre-market because the range is smaller, and I'll just partial out, and I could have held it a little bit longer. I could have made a lot more money, but whatever. I made money at the end of the day, so I'm just gonna walk away. I'm up 12.5K today, so I'm good. I don't need to do anything else.
Yeah, I'm gonna start getting to the charts a little earlier then.
Yeah, just and also use the economic calendar. So, and you'll start to understand this a little bit more as you study the economic calendar. But on a day where we have FOMC, it's kind of like this, right? If you have one session, if one session expands, the next is going to consolidate. Okay, so during Asia, I'll go back to the chart. During Asia, let me close this. Okay, during Asia, we expanded. Okay, then we kind of consolidated. So going into London, we consolidated. So then early pre-market, I'm expecting us to do what? Because we consolidated during London, I'm expecting us to expand. Then I understand that we have FOMC at 2 o'clock. So what is AM session gonna do? Consolidate. Because PM session is going to expand. So you kind of got to understand that as well. And that's how you can kind of time and see what's going to happen. So I would say if you're planning on trading pre-market, then, you should be waking up at the same time every single day just to keep it consistent, keep your circadian rhythm in check and everything anyways. So I would say try to wake up earlier. But if you want to decide to trade or not, pay attention to what happened during Asia and then London as well. That's kind of what I would do, and then also look at the economic calendar. So like I said, going into tomorrow, I wouldn't trade personally. I'm not going to enter anything before like 8 o'clock, just because we have an 8:30 a.m. news release. So although it may move before, I know that the high probability setup is going to form around 8:30 because we have that news release. So I'm going to wait until then before I consider taking any trades. Does that answer your question?
Yeah, I've been going to I'd be waking up at like 6 to go to the gym at 7, but
Yeah, I'm not going to the gym in the mornings.
before work, but
Yeah, I'd rather go to the gym at night.
Missing early setups earlier, so I might just go or hit the charts earlier and then just go after
What time do you go to work?
at 30. I'd be leaving at like 12:30.
And what time do you finish?
Like I'd be getting home at like 10.
Ooh. I don't know how you would structure that then, because like if you're going to the gym early and you're coming back before pre-market, then you're coming before market open, then that's honestly might work better for your schedule.
Yeah, I might just start going at like 11.
To the gym?
Yeah.
Well, look,
if you do it like this, right? Because you're not going to catch a trade every single day in pre-market, which is fine, but you might find yourself catching higher probability setups or like easier setups on your eye. So what I would recommend that you do is wake up at your normal 6 o'clock time, sit on the charts till about 9 o'clock. So your session could be 6 o'clock to 9, and try it out for 2 weeks and see how you like it. And then you can just adapt it and see. Like I'm always changing my set. Like a lot of times, like during the months of October, November, December, I'm not trading pre-market because it's slow. There's like no volume whatsoever. But now that the markets have picked back up, I like trading pre-market. It reminds me of when I used to trade like Euro USD and Pound USD. So I would say wake up, trade between 6 and 9 o'clock, finish. You know, if you catch a setup, that's cool. If not, walk away and then go to the gym after. You have between 9 and 11 to go to the gym, and then you could show up to work at 12. So you could do something like that. And most of the time, I'm done before even 9 o'clock if I take a pre-market trade. So you can do it like that if you want, if that aligns with your schedule a little bit better.
Yeah, I ain't got to be there till like 1:30. I'll just be leaving at like 12:30, 12:45.
Oh, you're good then. Yeah, you got plenty of time then. You can really work around with your schedule however you like. Just see what works best for you. But that's going to cut it for today. I'm going to go ahead and post this recording. I hope you guys enjoyed it, and we'll talk soon.